welcome to the Africa Early Stage Investor Summit. And I'm really honored today to be hosting a conversation with one of the most successful fintech startups on the continent and a VC fund that's been instrumental in their journey. My name is Philip Kirchhoff. I'm the CEO and co-founder of Startup Bootcamp Afritech. With me today is Babs, co-founder of Kuda Bank, which was a 2018 alumni from our program, and Dr. Ricardo Schaefer with Target Global. So we have a short session today. We're going to jump straight into this. Let's start with the founder, Babs. Babs, just give us a very quick kind of summary of your the journey. I mean, you started, with your own money in a fund, like many startups do. Although I think you took a slightly bigger leap with selling your house, but maybe just talk us very, very quickly, kind of from there through to the first kind of seed round when the institutional fund started joining.
Yeah. Hi, Philip. Thanks for having me here. Yeah, look, it's been a bit of a crazy ride, but I would say an enjoyable one so far. And yeah, you're right. We at the beginning of the journey, it seemed crazy to want to sort of build a bank. The kind of amount of money required to start was, mind-boggling. But, I was very convinced that, this is something that was achievable. So convinced that I managed to convince my wife to sell our dream house to actually start the business. The funding for it kind of evolved over time. So at the very beginning, it was more sort of friends and family, and foes as well. That's an extra F for you there. Yeah, and then from there we kind of sort of ran the business. We grew, we executed sort of pretty well, and then we managed to get institutional investors over the line, and yeah, and we've been growing ever since.
And given that the audience here, a lot of them are earlier stage investors, I mean, so you guys did about 1.6 million in safes. What was any lessons, any challenges, anything you can share, with just in dealing with early stage investors that's useful for the audience?
Yeah, I mean, I think in my experience, there are some very good angels and there are some not so good angels. I think the important thing is to always sort of partner, and it's not about taking money. I think it's more of a partnership. It's about partnering with people that sincerely have a shared vision, and they align with not just your vision, but just also your general ethos and how you view the world. I think because it is a long-term journey, even right from that early stage of sort of angels. The investors we had a lot of challenges with, didn't have shared vision. We weren't aligned. Yep. So it's definitely not about money. Money does help, but it's actually more about, how you want to build a company together. So, that's one thing I think founders should really watch out for. And for early stage investors, you should really kind of, appreciate that, founders, I mean, I'm not trying to sound sort of egotistical or anything, but founders are the magicians. They have to turn water into wine. So yeah, they actually have to work really hard to, make this company a company. So they need like the support, not the headache, yes, to help them build a successful company.
Great. We'll come back to that in a bit. Ricardo, thanks for joining. Maybe you could talk to us a little bit about your background. I mean, you're one of the most experienced fintech investors on the European continent. You're personally invested as well as through funds in most of the most successful startups, scale-ups. Just tell us a little bit about how you got into that. and how you ended up at Target.
Yeah, sure. So I actually have a banking background. I spent 6 years in classic kind of M&A investment banking. And then I was very fortunate to join at the time a very small fund called Seed Camp, about the third fund, which ended up investing a lot in fintech at kind of first round, from Pleo to Revolut to the fund before was in TransferWise and Curve and Moniz. And so that really kind of opened my eyes also to all the opportunities in and around fintech. And then I left, I built my own portfolio, also again focusing on fintech. I tried to raise a fund unsuccessfully, so it's also been on the other side, which was very humbling and really, really good, because we never really got to that fund size that we wanted to, and eventually pulled the plug. And that's when I started chatting with Target, who I've known from a co-investment at the time in Grover and in WeFox. And I joined the second early stage fund in January 2020,
it was very, very shortly before you invested into Kuda. So what were you looking for when you started looking at African tech startups? Because Kuda was the first one you guys did.
So we came to Kuda in a kind of, as it often happens in investing, particularly in early stage, through a bit of luck and opportunistically. Really, there was no plan to invest in Africa at the time. It was a kind of an angel investor that I knew that approached me, obviously knowing that I'd done a bunch of investments in the space, and also in Revolut, which is obviously a good comp. And that really kind of opened our eyes to, again, kind of from a macro level, but also then chatting to Babs, we got very quickly excited about the opportunity and about Babs and his vision. So it was more convincing than the partnership that we should spend more time in Nigeria, which was obviously we've done after the investment, and ended up investing in a bunch of other companies as well.
And so what were some of those things? Because what many people may not know is, I mean, you guys actually never met in person until after the transaction had closed, right? And so like some of those challenges, trying to do this whole transaction remotely and during COVID, that just adds that much more friction. What was it about Kuda or the fintech opportunity or the African scene that really kept driving it forward for you? And Babs, you can jump in here as well.
So, I mean, the biggest challenge was I think that on the very first call, the generator cut out, and there was no Wi-Fi for I think like 20 minutes, and I got all the partnership together. But you need to kind of, that's just something that can happen in this part of the world, and shouldn't distract you from the opportunity. But what caught our eye was the fact that Kuda managed to grow so quickly with so little kind of capital, at a point where I think when we first chatted, you guys had like 50,000 accounts 6 months in, right? So really early signs of product market fit, and also knowing there was no digital bank that has emerged as a winner, and then there's a kind of good comps across the globe, new bank in Brazil, and also across Europe. So this model just makes sense. Why does it make sense? Because customers are unhappy with the traditional banks and they want to have a better customer experience, and that's exactly what Kuda was offering. I know Babs, jump in. But...
Babs, how did you overcome the internet dropping out on your first call?
Yeah, I mean, so these are some of the challenges that we face in Africa. There is sort of infrastructural deficit, but again, I think that's an opportunity as well. So in every sort of challenge, there is an opportunity, and it's kind of like the same with Kuda. There are, I mean, a lot of good work has been done in banking and financial services generally, historically, but due to sort of the infrastructural deficit, like distribution is an infrastructural deficit, and we overcome that by sort of building a cloud-based API-driven bank. So during COVID, we couldn't see physically, obviously. But I think, again, this goes back to sort of the early stage investors, like the angel investors that we had. They were very good in sort of helping to bridge that sort of barrier of trust, of, basically explaining to Ricardo, Target, on what Kuda really is. And I think that helped in getting Target over the line. So one of our, Ricardo, I believe you spoke to, is it Chris Adelsbach? From Techstars. The introduction was from somebody that Ricardo knew that had already invested in Kuda. So I think these things help. And then on my side, and on Kuda's side, I think it's really important to just understand, your vision, what you're trying to build, and to be able to articulate it in a manner that, it's easy to understand, and also, most importantly, demonstrate that in your execution. I think those are, for me, the two biggest things. You need to have two parties that believe in a dream, and as a founder, you need to be able to demonstrate your ability to execute towards achieving those dreams. So I think that combination is sort of super for sort of investor and investee company.
Maybe just to add 2 points. I mean, obviously it wasn't that we had one Zoom call and then, we send the term sheet across. So we actually spent a lot of time on WhatsApp and trying to kind of really understand the different risks involved, and understanding the consumer behavior and kind of, but from the very beginning, literally the very first call, I think what caught our attention was really this big vision that Babs had on. I think you really started out with, your mission to bank 1 billion, every African under the sun, and kind of 4 billion customers that needed that needed a Kuda card, and that just caught our eye, right? And early stage investing is very much also in kind of believing in the upside and not just seeing the risks. And I think that's what kind of distinguishes a bit of kind of a seed early stage investor from a kind of growth investor type mindset, right?
Well, I do want to definitely chat about, just for the audience again, because I mean, look, you didn't set out to raise an institutional round initially. You were doing angel, and so now you have this mix. So kind of, if you look at that round and then bleeding into your Series A round, when Valar came in, now you've got this mix of early angel investors starting to potentially exit, and they're kind of in this middle ground. What advice would you give to kind of, angel investors and earlier stage investors that can make that process go easier, and not kind of stand in the way or derail the process?
Is this for me or for Ricardo?
Both, yeah. But how did you manage the process?
I mean, just
for you.
I have a very short answer here. I think always stick to market standards on both ends, founders and investors, and people will appreciate that, investing after the angel round or early round. So just always look at across what is acceptable and market standard and what isn't. I think that's that. And
Ricardo,
what's best for the company really is always what matters at the end of the day.
And Ricardo, what do you find in terms of a difference between kind of European angels versus African angels?
I wouldn't make it too big of a difference, to be honest, or generalize here. There's on both sides very good angels and not so good angels. I think they take a lot of risk coming in early, but on the other hand, as a founder, obviously, in an ideal sense, you have angels that bring a lot of value in a specific area. And so, I mean, I wouldn't draw a conclusion and kind of these are better than the others. It always depends on the individual.
Sure.
Yeah, I also think it sort of depends a lot on sort of conviction as well.
And I mean, what you want as a founder, just as a general advice, is other founders. I think that's always that these are the best angels, right? Because they've done that same journey. They can help you with specific questions. So if you can, I think that will be obviously the ideal angel is a successful CEO, maybe someone that has exited a business or is kind of scaled a company before.
And Ricardo, did you find, I mean, both within Target and some of the other investors, or even with Valar, I mean, that there's kind of this Africa discount function, or like how did you find working those valuations?
So at the very beginning, the number one question we had was, is there smart capital following our initial kind of check, and this concern very, very quickly evaporated, just, obviously with Valar coming in, but also what we've seen over the last 12, 24 months was that particularly US funds and top tier investors are now kind of entering at a later stage. And, valuations are always also a function of supply demand and kind of more of a based on a dynamic in a competitive situation. So I don't think there's a big discount here, to be honest. I think, you have fantastic founders, fantastic businesses, big opportunities. Of course, there's different types of risks, but it's not that you can generally say like Series A's in Africa are a lot cheaper. I think that gap's closing.
Great. Babs, we're going to run out of time here, but any kind of closing thoughts that you would like to offer, just to help advice for really investors to support founders better, and also founders better choosing or selecting the investors that they take funds from?
Yeah, I think for founders, I would say always do due diligence. I mean, investors do due diligence on founders and their businesses. I think it should be the other way as well. It should be a two-way thing. So don't be afraid to do due diligence. And it's not that an investor is doing you a favor. It's not free money. They're expecting a return. So, it's a business arrangement that develops into sort of a relationship, a working relationship. So you should definitely get on with whoever is bringing money into your business. So it's very important. The relationship is critical, and it can make or break a company. It certainly makes your life easier when you have the right investors. And then from investors, I think everything you do should just be in the best interest of the company. Once you align with the company, your self-interest will be taken care of. But if you put your self-interest ahead of the company, then both of you are not going to win. So I think, the mindset thing. And once those mindsets are aligned, then there's an opportunity to build a really successful business.
And Ricardo, maybe last question for you. I mean, so you've obviously, so far things are looking really, really great with Kuda. What are you guys branching out past fintech, or what else are you looking for on the continent?
There's a couple of other investments that we've done since then that I think we're going to disclose over the next couple of weeks. We're very excited about, and we want to deploy more capital on the continent. We're very excited. We love the founders, and they have a lot of grit. They're solving real problems, and I think it's a fantastic place to invest. Obviously, always with the eye wide open, but there's I think this kind of the tech ecosystem in Africa over the next 10 years will be bringing a lot of positive surprises, and I think we'll see a bunch of fantastic companies coming out in the next couple of years.
Great. Well, Babs, it's been an absolute privilege and an honor to have been with you for really the vast majority of this journey. And Ricardo, thanks for being, really defying the expectations and being one of those investors that, startups love to work with. So congrats, Babs, and good luck. And Ricardo, looking forward to seeing the announcements for the follow-on investments or the additional investments. So thanks so much for joining us.
Thanks for having us.
Babs, Ricardo, and African Early Stage Investor Summit. For all the investors out there, keep aligning yourself with startup founders, and for the founders out there, make sure you do your due diligence. Okay.
Awesome. Thanks, Philip.
Yep. Cheers, guys.
Cheers.